Welcome to the Daily Brief, where I'll go over the major highlights in the market for Thursday, September 8th, and then we'll see how things look for Friday, September 9th. And at the beginning of this, I send my condolences to the nation of Great Britain and the whole United Kingdom in the passing of the Queen. And that will really be the focus of the media. I know I watch it because that's kind of my background, my heritage. But the one thing that I stated in the full length videos, don't let that be a distraction from what's going on. There's still economic things happening. There are still other geopolitical events that are happening. Even if you're kind of focused on that, we don't want to be distracted away from what's going on. Or you may not pay attention to this at all. I don't know. But let's go back and talk about what happened on Thursday. Right at the open, we had a gap lower. Chairperson Powell was giving a speech, and I neglected to mention that in yesterday's video, and I apologize for that. And it's like, anytime this guy's going to talk, it must be the end of the world. So then we ended up gapping lower, but then prices rebounded after that when it pretty much was the same things that he had been saying. It's like, there's nothing new here. We've already dealt with this, so let's take things higher. And we rebounded up to R1 at 4,010. So just think of this. Yesterday, we were dealing with 3,900. Now we're slightly above 4,000. As the day went on, though, we saw some selling come into the market, took prices down to the daily pivot at 39.58, but then buying came back in. Prices went back positive, but we never did get back to R1, although we did close almost at the high. There was a nice little buy program that came in right at the end that pushed prices a little bit higher. We ended up being up 0.66%. And we were above average with our volume, and we're starting to see that now. Volume is starting to flow back in. Our technicals are still negative, but showing some improvement, especially in the short term. And we have even a few of our intermediate term indicators that are really showing some improvement, but we're not seeing across the board improvement yet. And we're not seeing a lot of the support areas in other markets that we need to see in order for things to really continue. Now that could all change. And the bounce that we saw both on Wednesday and Thursday, that could get all blown away in Friday's session. But right now we just have to go with what we see on the charts, and things are showing some improvement. Inflation and interest rates are still the big concern. We have the geopolitical things. Right now, the big one coming out of England is probably what's going to be distracting folks the most. Earnings are kind of starting to fizzle out a little bit. We have the recession debate going back and forth, and then Chair Powell, and I'll address that here in the next slide, where he gave a speech, but it was the same thing that he's already been saying. So it's like, nothing new here. We have to ask ourselves, is this only an oversold bounce that we've seen over the last couple of days? The technicals, yeah, they're improving, but we need to see more follow through. We need to see some other things turn back more positive that have not turned positive yet. And the European Central Bank ended up raising rates 0.75 basis points. And I should have taken will out of there. They already did raise those rates. That was the high end of what they were expecting. There were some folks were hoping for 0.5%, but they went with the 0.75% instead. The S&P is just above resistance, so we broke just right into the 4,000 area. Can that continue? We're seeing some improvement in our rotation setups and so forth, but we're still kind of on hold with those right now. But they do continue to improve. The 10 to the 2, the 10 to the 5, those yield curves are still inverted. Interest rates and the dollar are having a real tendency to go in the opposite direction of stocks right now, so they have a strong inverse correlation, even though it's not as strong as it has been. And this can change. Just because it's that way now doesn't mean it's always going to be that way. Over a few days, they could get back to not having such a strong inverse correlation. Sentiment is still leaning more towards the fear side, but it's not extreme. And we had jobless claims that came out where we decreased to 222,000. That's fewer people filing for unemployment than what they expected. They expected it to be 246,000. This goes kind of into that scenario that, wait a minute, we're not in a recession. Look at employment. It's still doing great. Okay. And then our trend It's negative and weakening. With the last 2 days going up, the ADX is starting to fall. We're still above 20, but it is a weakening trend. With the 2 up days, our bias is now positive, and I've switched our momentum from mixed to positive. A real leery mixed right now. We could just see all this wiped out in Friday, or we might really get a fire under the market and be able to break up to the upside. Excuse me. So what's our outlook? The technicals are improving after hitting that support earlier in the week, that trend line that I was talking about right at about 3,900. That's pretty positive. There's really nothing coming out on Friday other than wholesale inventories. And we have the whole list of geopolitical events. And just have to be aware they're still going through the lockdowns in China, which may feed over into the supply chain issues. Oil is going back up a little bit, but it has been dropping. Any other Fed speak that we may get, and then the recession debate going back and forth. We still have to tentatively go with the down scenario for all of the reasons here, a lot of these headwinds, but the technicals are improving and they're holding up on that trend line after bouncing from being short-term oversold. So you might be a little hesitant to go short right now because we haven't broken through that trend line to the downside, but we can't really go up right now because most of our technicals, yeah, they're improving, but they're still negative. And so we have to wonder, can this continue? Our scenarios in our rotation and our setups, they're showing some improvement, but they're still on hold for right now. And the technicals are not really helping us, although a few of them are switching. We haven't even gotten back to the 50-period moving average yet. So we just want to, we can't really use our oscillators right now because they're all negative. So we're having to use different levels of support and resistance and then moving averages to kind of get some positive glance on things. And we can't really go with sideways because even though the ADX is declining, it's still above 20 and the red line is still on top. So our conclusion then is the S&P is negative, but showing some improvement. Short term, it's improving after bouncing from being oversold. Intermediate term, it's negative and could be improving. Long term, we still remain negative. So thank you. If you want to see a more in-depth discussion and some of the charts that I go through, please look at the full-length video. I will be preparing the weekly video and the intermarket analysis video in addition to the daily video for Monday over the weekend.